So, quick show of hands. How many people here have invested in cryptocurrencies? Do you have any Bitcoin? Yes, wonderful. I'm seeing some hands go up there. Well, the next session is absolutely for you. It's a bit of a controversial topic when it comes to the area of funding startups. So the title of our next session is ICOs versus VCs, an end of an era for early stage ventures. Well, this is what we're about to find out. So, ladies and gents, for our slightly controversial next session, please welcome our moderator, Pablo Moreno de la Cova from Coin Governance System. Thank you. Oops. Okay. There's a bit of a red carpet backstage. He's coming. It's all good. So now, please welcome to the stage, Pablo Moreno de la Cova. Thank you. Awesome.
Hi, good morning. Thanks for having me here to the organization. Well, I'll sit in the middle, maybe, no? Yes. Javier, I don't know.
You've already got water.
I'm Vinos. So I'll be moderating this panel titled ICOs versus VCs. Is this the end of an era for early stage venture? On my right, I have Vinos.
That's what the title says. Let's see if it's true.
We got to find out.
And we'll see. So we'll have Vinod, who's principal at Draper Spree. They are venture capital specialized in blockchain and based in London. And one of the main, they're part of a Draper group of companies. Yep. So they have a lot to say in the blockchain technology. On my left, I have Javier Gonzalez, founder of VentureSpec. He has been an advisor to startups for a long time, and now he's been very involved in the crypto space and in ICOs and all that. So I guess the first question I have for them is, we've seen since the mid-2017 until, I'd say, summer this year, a massive boom of ICOs, several billion of dollars raised in funds through initial coin offerings, the sale of tokens, and now we've seen the volumes decline rapidly, and the price of all those tokens, the market price is crashing. Is this the end of ICOs? Is this just a bump in a new way of doing venture capital? What do you guys think? Maybe Vinod, you start?
I can start, yeah. So, I mean, if you look at some of the stats, just looking at some of the Q1, Q2 data from this year, you look at actually the volume of ICOs have actually gone up. So there are more and more companies trying to list on an initial coin offering. But I think the trouble has been that the quality of the companies have come down. And as a result, the kind of money that they're raising is not reaching the minimum levels required. And so most of the companies that are now trying to do an ICO are actually not even raising the minimum required, which is 100K. And so I think that's become a challenge for the industry, because I think a lot of people now feel like anyone who can ICO will ICO. That's the saying in the market. Now I think that's not becoming true anymore. And so that is a challenge.
Yeah, so anyone that can ICO should ICO. In the past 3-4 months, my recommendation to anybody that wants to start an ICO is not to do it because of the current state of the market. It is something that you can even prepare quite quickly, so it doesn't necessarily have to be built up over 6 months. So if you if you go back to the basics, and you actually build a product that somebody really wants and they're going to pay for, go back to that. That's really where the value is. Eventually, when the ICOs, let's say, when they come back around, as we say, you will be ready to actually show something for that. And you can still raise equity, maybe not from the amount that's required from Draper, but from others that see the view, that see the long run, from a product that's being built. So that will be my take on the ICO. So it's not over; it's in a standby.
So you both think this is come to stay, and they just need to perfect it a bit. How have ICOs disrupted your businesses?
So for us, they have been a couple of later stage. I mean, so whether it's an ICO or whether it's venture capital money or private equity money or angel money or anything, it's basically a function of the ultimate commodity, which is capital and it's money, and it's just different kinds of money. So what it has done is, in the initial wave in 2017, it did take out some of the big rounds from the market, because there were companies that had a lot of traction, who thought they could issue a security or a utility token, and they went to market on an ICO and they were successful.
That's leaving you guys out of business, no?
That's right. So we missed. So there were a couple of deals which actually we brought to investment committee. We're ready to write and sign a term sheet, and then they decided they were going the ICO route, and they did, and they were successful, and they raised ICOs from the public markets around the world, and so it became a threat then. But actually, the companies that didn't have now come back to us and have said, actually, we want sort of more smart money, not just the capital. And if you also look at the flow of the capital in an ICO, it has to go from fiat to crypto, crypto to token, and then token back to crypto, and then back to fiat, because you've got to pay salaries in fiat. And so that whole thing presents a challenge.
Mm-hmm. Yeah. I mean, I don't know what I can add to that, other than to say that I think the attraction of some funds that are like Draper, that have behind people that really believe in crypto, in the tokenization of startups. Those are probably the ones that they're very few. Mm-hmm. But I think that's the evolution for some of the funds, whether it's angel, whether it's beyond. That would be the evolution of those funds that understand that there is a market, there is a market for the tokens. There will eventually be a secondary market, so you'll be able to trade the tokens. So those are the funds that are actually in the front run, like Draper and others, that would be able to capture value from those startups.
It's worth noting that some funds might, I mean, if you're an entrepreneur and you've had an ICO, you're thinking about an ICO, you want to, and the funds you're speaking to, you want to just check in with them that their LP agreements doesn't stop them from participating in an ICO or owning tokens or any other non-equity type security, because that could be a dampener on the future of fundraising for your company.
Okay, and in terms of, you mentioned, Javier, liquidity is obviously a clear advantage of tokens because you can actually trade them, and that's an advantage over private financing. How about, is there any other competitive advantages of ICOs apart from there being a big pool of crypto money that you can tap? Is there another competitive advantage? I don't know. Do tokens make sense? I mean, you see every project going blockchain now, and blockchain is a big word, and every project wants to be decentralized. Is this make sense, what we're seeing now?
I think there are two things, right? So the first is, it is the type of entrepreneur that it attracts. Mm-hmm. And so if you're an entrepreneur that already has a vision and actually all you need is scaling capital and you don't want any hand-holding, then an ICO is perfect because all you got is the capital and you can do what you want to do. But very often that is not true. And the other plus is also, if your token sale has a public component, then you've attracted the mass market to your product. So if you've got a part of your product that the mass market can interact with, mm-hmm. then that's a sales opportunity. Mm-hmm. And so it's a bit like crowdfunding.
Mm-hmm. Not all projects, not everything is, let's say, blockchain ready or should be on the blockchain. So that would be like the first thing that any entrepreneur that wants to do any ICO is to really understand that you're doing this because you're using part of a technology or part of something like the crypto and the tokens that you're going to issue. It's not always a given that you should do the tokenization, the tokenize, that you should do that. So just because it's the hype, just because it's been so much money, millions of dollars and euros being raised, don't fall into that hype. Mm-hmm. If the startup, if they really have the right product, they might not even need to do it. And then whenever they are ready to do the ICO, there will be investors there to participate with them.
Okay, makes sense. For this last question, I think I'm going to change the order because so Javier gets to speak before, and then Vinod, you can add some color onto that. Okay, so basically, I wanted to ask about security tokens. No, we've had the boom last year with utility tokens. People started questioning the nature of these tokens, which give very little rights to you're not really owner, you're a participant in a network, and you're supposed to profit from the network becoming, a very big network. We are having a lot of talks, and everybody in the crypto scene is talking about security tokens. These are basically securities that give you rights into the economics of a company. They can be similar to holding shares of a company. They can be similar to holding debt of a company and receiving an interest. What do you think? Do you think this is the future? Is this just the same as VC, but allowing retail investors to participate who don't know much about what they're doing, or one could argue, no?
Yeah.
What do you think of this?
So future, I don't know if it's future because it's actually already here, right? Mm-hmm. There's a lot of startups doing already security tokens. Is it a very good alternative at the present moment for an ICO? Yes, I believe it definitely is. I have a couple of examples, even a Spanish startup that will tokenize part of what their service is, what their product is. They will issue the security. So they will allow or they will do what you would do traditionally with the VC in the governance, to have a stake, whether it's economic or the governance of the company. You will have a stake on that. So it is a way to go. It is a very, very good alternative. I think there is an opportunity there for startups to do this.
And Vinod, to you, same question, but I would ask if this is really going to be challenging early stage venture capital. I mean, is this going to have people like you thinking, hey, where's our business going, no?
So the security token does mimic more closely what a venture capital investment would look like. It doesn't have the full economic rights of equity, but it gets close because it takes a shave of profits or it takes a shave of revenue. Now, I think going back to the point about what is the trend in the market, last year was a big utility year trend, utility token trend, and now we're seeing actually a bit of a mix. Now, it does matter what kind of business model your business is built on, because if you want to achieve an ecosystem where it's self-fulfilling, you want to be a utility token. If your model is based on just basically growing revenues and profits and EBITDA, then a security token works well for you. So it depends on kind of what kind of business are you building. For example, we're involved with an insurance firm that's thinking about an ICO. And that is in the space where it does make sense to do a security token over a utility token, because actually there's economics that can be still stripped out for the business to retain enough profit for the venture capital investors to be happy. So you it's a bit of a balance depending on where you're at.
So sorry, it's a token that is a security token, but at the same time it has kind of utility features, or
yeah. Yeah.
Okay, understood.
So is it a dual token or is it a single token?
It's a single token. Yeah. But again, your question is, I mean, whether it's becoming a threat to us. In the case where it is already a portfolio company, it's more about how do we participate. So do we actually invest in the tokens, or do we say we invest more in equity to support that token fundraising? So there's a question about where do you enter. But has it become a threat? Not really, because I think if you think about the Series A's and the Series B's, most of them still have an equity component. We're always having that equity conversation. We're not going to shy away from an ICO, but we haven't done one ourselves yet. Tim Draper at the top, he has, but out of the European fund, we haven't.
But it's true that issuing a security token whereby you participate in the profits of the company or whatever, allows you to access the funding without giving the rights that venture capital have, no? The preference rights and all these type of protections, the seats in the board of directors. Is this something, that at the end of the day, if you're an entrepreneur and you can do a security token ICO, you will do it instead of partnering with a VC, or?
I mean, I guess, again, going back to my earlier answer about the type of entrepreneur you want to be. If you're Telegram and you already know what the vision for your company looks like, an ICO does make sense. Telegram's ICO became messy, but it makes sense because you're actually tapping into the public markets. These are people who actually use Telegram, and it's circular, so it makes sense. Okay. But if you're an entrepreneur that kind of needs help, you need to figure out where in the market you're trying to break into, which segments, how do you sell, how can people open doors for you? Will an ICO do that for you? Not really.
Okay. I think, if the only reason that you're thinking of doing an ICO is because you don't want to have that governance, I mean, if I understood, where you were going to,
absolutely.
I think it's the wrong reason. Whether we like it or not, the let's say the funds, the system, if you want to call it, it is there. There is money behind it. There is investors. They are, they do have something to bring to the table. Because if it was not the case, then this would have been done many years ago, right?
Could I summarize by saying maybe that ICOs that have no kind of governance will have a higher percentage of failures, no? Or that
extremely high.
We don't know yet, but it looks like it'll be heading in that direction.
That's why it's looking by the market prices, no, of some of these tokens. Okay, I guess regulation has been a key aspect of the ICO space. We've seen regulations being very advanced in I guess looking at Europe, in several spaces around the perimeter of Europe. So you see Malta, Luxembourg, Switzerland, Gibraltar, Estonia. But what are you guys expecting from core Europe? France, Germany, Spain.
To be honest, I haven't had enough interaction with the regulators in that part of Europe. But in the UK, the FCA is definitely thinking about it because they're worrying about how they can protect the people. But I mean, the point is, you don't have to worry about Europe. You have to worry about where in the world is the best place for you to raise your ICO. It could be Japan, it could be Singapore. And you're not limited by the fact that you're in Europe. And so,
well, but I would say that startups normally tend not to have a lot of resources, so they start where they are, and then if they have to go to Japan to do an ICO, that's going to be a big barrier, no?
I mean, we've seen companies out of Lisbon go to Singapore to do the ICO, and so if you're, it doesn't take that much. I mean, most of the work is done remotely, so you're not actually entirely engaged in a physical process.
I mean, on regulation, France and in Spain, they have recently provided a framework. To be able to do this, so at least they're a little bit behind, from other places, but it's moving along. So
they are putting a bit of the framework so that more qualified investors can do ICOs.
Yeah, or at least
sort of
more
leaving
protection.
the retail investors out of the question. Does it make sense that retail investors have the option to invest in ICOs?
Yeah, I'm not sure if they're leaving retail investors outside of the equation. I think the privilege or the initial view is for the institutionals, so that they can come in, and then the retail investors can come behind. Okay.
I would agree with Javier's view that it does need to be a guided investment. Because, I mean, at least in the UK, you will be asked to declare, sort of, are you a sophisticated investor? How much of your net worth is going into illiquid assets? And the reason for that is to actually protect the everyday investor.
Yeah, of course.
Because they don't do the due diligence. They don't understand exactly what the economics look like. They may not read the white papers.
Yeah, they can't. They can't.
Okay, perfect.
The risk.
Well, I think we're pretty much out of time. Thank you much for everybody coming, and to Vinod and Javier for this very interesting panel.
Thank you.
Hopefully, you guys will come up with some highlights, something that you learned today. If you don't, you can find me
looking around,
and I'll answer to any of your questions.
Okay. Thank you.
Thank you. Thank you very much.
Great.